Supercalifragilisticexpialidocious. The markets are atrocious. It's making me nauseous. Oops, I mean nauseous. You gotta be cautious. People getting cooked because they try to time the bottom. Ooh. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth. What's up, guys? Mr. Fit to Flourish, and today we're going to be talking about what's going on in the markets and what trades did I take today in order to make two bandos, $2,200 on the day in a little more than 20 minutes total for these trades. I took 3 total trades and made just about $2,200. Let's talk about what I did in the markets. Let's take a look at the charts. Okay, I know a lot of people like these videos where I'm sharing, hey, what am I taking? And like I said, I think everyone is pretty good at trading. It's all just a mindset, really. It's all just a mindset. We all have the skills to be able to do this, but it's really just a mindset. Trading is 90% mindset and then 10% skill. All right, so let's get into it. So I trade on the 5-minute time frame. And I use key levels. So if you're looking at my chart right now, I'm using key levels, okay? People keep asking me, hey, what indicators are you using? I'm using an EMA that I made, but it has the 9MA exponential moving averages, okay? The 9MA, the 20, the 50, the 100, and the 200. You can do that yourself. It took me a long time because I'm not tech savvy, but you can script this yourself. Or join the Discord and I could just give you the script. Link in the bio, by the way. And link to Instagram and TikTok too. A lot of good content there too. Saudi ATR levels. I don't really use them all the time. I just kind of use them for confluence. But yeah, Saudi ATR levels. And then I also use the volume RSI. It's just called volume RSI. People keep asking me, what volume RSI to use? Volume RSI, and it's by The Peaceful Lizard. Okay? The creator on here is The Peaceful Lizard. All right? It's, let me show it. Right here. 249 downloads. Volume RSI. Okay? That is all I use. EMAs and volume RSI. Pretty much that's the main thing I use. Anyways, let's take a look at the first trade I took, SPY. Today, by the way, is March 12th. March 12th, 2025. And it is what is it? Wednesday? Yeah, today's Wednesday. All right, today's Wednesday. So, and I took the trade. I made this while I was at work. All right, I'm a freaking doctor, and I took these trades at work. So if I could do this, like while at work, barely looking at the charts, then you could definitely do this. All right. So let's take a look at what's going on here. So immediately, I noticed that we're opening at these highs, previous highs from the previous day. As you can see, big topside wicks. Big topside wicks means that we have sellers above. So I'm already thinking, and plus we gapped up. We sold off previous day, and then here today, Wednesday, we gapped up. And we gapped up off of CPI. Today we had a decent CPI. It was better than expected, but these moves never last, especially in a downward trend like we are right now. The market is getting cooked. Okay, so I was like, this is very suspicious. The first bar, if we were indeed going to make a big move up, the first bar would have been a pretty nice bull bar to the upside. But we opened right on the 200 moving average for the 5-minute time frame, and we created what is called a this could be termed the evening star doji, but this is basically just a doji. Okay, this is a doji, and it's kind of a long leg doji. A long leg doji is a doji with big wicks on both sides, and then the body's pretty small. Okay, but the wicks are the same size on each side. But yeah, we just created a top side wick, bottom side wick, which basically means that okay, either we have a lot of resistance, we're gonna sell off, or we're having fighting between buyers and sellers. And I saw that we were having fighting between buyers and sellers here. We had that for a second bar, but what I noticed and what I pay attention to the most is the volume RSI. The volume RSI was coming down pretty hard, which means that there's a lot of downward volume incoming. The volume RSI is a momentum indicator, and momentum indicators are oscillators. Let me write these down for you guys. You're probably like, what the hell is this dude talking about? Momentum indicator, because it shows the momentum. Okay, so things like the MACD, the regular RSI, the stochastic RSI, anything that's on the bottom is that's off of the chart is a momentum indicator. Okay, and they're also termed oscillators because they oscillate up and down, which means they move up and down. All right. So the first thing I noticed, we're at these highs. Okay, big topside wick here. There's sellers here. There's a lot of sell orders by institutions, and we're rejecting there. Not only were we rejecting at these highs, we're also rejecting on the 200 moving average. We're below the 200. If we're below the 200, that's extremely bearish on the 5-minute time frame. Extremely bearish, and you'll notice this if you chart. Okay, so what I did was after this move here, this is how I took this trade. And This is more like a supply and demand trade. I don't usually take those, but if it's an opening play and if the volume RSI is telling me that there's downward volume, I'm taking it. Okay, I'm taking it. And the risk was so low. This is what I did. I set my stop at the high. I said if we close above this high, I know that my thesis isn't validated. So if we had a bar push up and close above this high, I was like, oh man, that means there's a lot of buying pressure. But the risk was only to there. So if you do a risk to reward in our thingy here, I don't even know if you guys know what this is called, so I'm not going to give it the technical name. But if you use the risk to reward indicator icon thingy, you can see that we can potentially have a gap fill. SPY usually fills the gap from previous day, especially on Thursdays, which is something you guys should look into. But especially in this downward market right now, the downward trajectory. Anyways, so I entered after this bar close, and I was like, you know what? If we break above this high, then I know that, okay, my thesis is invalidated. But we're rejecting on the 200, and there's a big top side wick, and the volume RSI is coming down. There's too much confluence that we're going to come down and fill this gap. So I took puts freaking immediately, okay? Freaking immediately. And then this bar was turning green, and I was like, oh man, I might be wrong. It was turning green. You could see by that top side wick. And then it came down extremely hard. And I was like, all right, once it taps that 9 MA, I'm probably going to get out, even though it can continue to the downside. But I want to see what my percentage was. So it was an immediate like 60% gain on this bar. And by the way, I took 0 data expiration option contracts, which is very risky. But I saw the momentum. If there's momentum, I'm taking it. I'm taking 0 data expiration contracts. Anyways, entered here. So the R ratio here is 4.95. I don't know if you guys can see that, but the R value is 4.95. So I was like, yo, this risk to reward is insane. It's pretty insane. But I ended up exiting here with the R ratio of a realized R ratio of 2.66. All right. Which is still very good. You want your R ratio to be greater than 2 for it to be a valid trade. And I saw that all I do is I look to see, okay, how much upside would there be? Where's my stop? My stop is up here. Okay, so that's pretty small compared to how much I could actually gain was huge. So that's why I took this trade. Okay, volume RSI was coming down, and I chart all the time, so I know how these charts work. This is a pretty risky trade as a beginner because there's no setup really. There's not really a setup. This is more of like intuition and kind of reading technical analysis. Okay, but that was the first trade I took. All right, the next trade I took, I believe, it might have been SPY again. I don't remember what. No. Actually, it was IWM. Yeah. All right. I think it was IWM. All right, so the next trade I took was IWM, and this one was more of a setup. So what I was looking for here is the volume RSI, again, is super low. When the volume RSI is low like this, then you know that there's a lot of downward volume. And when it's flat, it's like, it's cooked. Okay, it's below 30, it's cooked. So we also had a big drop here on IWM. But what I was looking for was, I was like, okay, if we break below this structure here, I'm going to take these puts because not only is that a previous like support, that was the previous close, which is a really good support. So if we break below that, it's cooked. But we also had the 920 crossover here, which means that we're getting inverted moving averages, which means this is extremely bearish, and the volume RSI was low. So I was like, you know what? I missed this because I took SPY. So if we are going to get more downward continuation, we're going to take out this previous low. So what I do, I saw the break here. Actually, I got in a little bit early. Not gonna lie, got in like here on this downward break because we had this this manipulation move up. We tested the 9, which IWM likes to do. So I entered after the formation of this bar. So I entered on the open of this bar here. Okay, and then we had a pretty good downward continuation. And then I just exited kind of early because we were doing some funny business right here. We had a green flash and then we turned red. Then we had a green flash and we turned red. And whenever that happens, I know there's a lot of fighting between buyers and sellers, and the contracts weren't really moving that nicely. I took 0 data expiration contracts. So I just exited here. I think it was like a $600 gain. That first SPY play was like a $1,300 or $1,400 gain. So yeah, just $1,400, and then this one was $600. And then the last play I took, I waited till the end of the day. I don't want to take any upside moves right now in the market. Again, today is March, what's today? March 12th, Wednesday. So I don't want to take any upside moves personally because the market's in a downtrend. So I'm going to go with the trend. So the best trades intraday are going to be with the trend. So anyways, so I waited. We're getting these up and down moves. And then here, this was an interesting point for me because I was like, we have a lot of topside wicks here, and our volume RSI is curling over. And at the same time, Bitcoin was selling off. And I kind of look at Bitcoin and Nvidia for confluence when I'm getting into trades. So I saw these huge topside wicks, and I did the same exact thing as I did in the beginning. I saw topside wicks, which means sellers are stepping in. So I wanted to take a short position. So I took shorts right here, and I said if we whoops, right there. All right, so I said if we close above, I wanted to target these 2 wicks. Could have been this wick too, but I wanted to target these wicks. I said if we close above these 2 wicks, then I know for a fact we're going to get a big fat move to the upside, so I'm going to exit. But I said we can probably start from up here and sell all the way down, at least to this first target here, and then to this second low down here. Either way, let's take a look at our R ratios. 4.96 again, and then the other R ratio, risk to reward, is at 8.04. That's insane. That's insane. Okay. And some of you guys might be like, oh, that's not realistic. Yes, it is. Look at where my exit would be. And we have topside wicks. Anyways, so entered there and then just kind of waited 5 minutes, and then boom, we had a huge sell, and then I held. I wanted to see continuation, but we kind of held here on the 20 MA, so I exited there on the 20 MA, and it was a 20% gain. If I would have held, holy cannoli beef ravioli, this would have been a lot bigger, but I wasn't looking for too much. 20% for me personally is good enough. All right, so 20% of $10,000 is $2,000. So I only put in 1,000 on this trade. So it ended up making 200 on that trade. So in total, made $2,200 on the day. I'll post let me see, yeah, I'll put it in the picture in the beginning. I'll post like the gains from today. But yeah, that was the trades from today. Again, I always look at the volume RSI, look at my moving averages, and then I just look at price action, all right, and see if we're breaking structure. So hopefully that helped somebody out there. I know people like to see how I take trades and stuff like that, but you really can see how I take trades in the Discord. If you're in the Discord, you know, like I'm literally talking the whole time, like, oh, this is doing this is doing this. Oh, we're getting a break. Oh, watch for this level. Watch for this level. It's getting to be pretty easy and pretty fun. So anyways, it's your boy, Mr. Fit to Flourish. Hopefully you enjoyed that. Supercalifragilistic, and I'm out.